This is your LMAX exchange technical update for Wednesday, April 19th, 2017. Euro dollar. So the euro continues to trade higher after bouncing from 105.70, where there was some key support in the form of a Fibonacci retracement level and at bottom of the Ichimoku cloud, and has now extended gains back above 107, suggesting that we could be putting in a higher low at 105.70 above the previous higher low at 104.95 in anticipation of that next major upside extension beyond the recent 2017 high at 109.06, which would further solidify and strengthen prospects for a longer term base. At the same time, while the market holds below 109.06, there is still risk that the longer term downtrend is intact, and a breakback below recent support at 105.70 and down towards 104.95 would strengthen the bearish outlook. So right now 104.95 and 109.06 are the key levels to watch above and below, but into the midweek the bullish case is a little bit strengthened as the market establishes back above 107. Sterling dollar. So a major break in sterling dollar on Tuesday, with the market taking out critical resistance in the form of that December 2016 peak to end or potentially end a period of consolidation and suggest that the market could finally be putting in some form of a major base. At the same time, it will be interesting to see how the market responds to its break above 27.75 and if it's able to sustain gains above that previous peak. Inability to sustain gains above the peak would suggest the market is seeing a false break here and poised for another down move back towards potentially the 125 area. At the same time, if the market is able to sustain gains above 27.75, it could ultimately open the door for projected upside towards a measured move in the 135 area. This after the market had roughly consolidated between 120 and 127 for so many months. Of course, we did have that critical low from October of 2016, that plus 30-year low down at 118.40, but since then the market's been consolidating between the 120 and 127 area after finally breaking above that 27.75 December peak. Again, what's going to be important to watch over the coming sessions is how the market responds after breaking above 27.75. If it holds above into the weekly close, and that will sort of solidify the possibility of a major base in the works. Inability to hold above 27.75 will suggest again a false break and expose renewed downside in cable. Dollar yen. So dollar yen has seen a little bit of a bounce into Wednesday, but the market is mostly consolidating off recent lows just shy of 108, and there is risk here for a continued downside, with the market seen towards a measured move objective at 107.60. That's the 400-point measured move objective to the downside following a 400-point consolidation between 111.60 and 115.60 that we had seen earlier this year. At this point, any rallies should be very well capped, ideally into the 110 area, while ultimately only back above 112.20, the high from the 31st of March, would take the immediate short-term pressure off the downside. Euro Swiss. So Euro Swiss is seeing a little bit of a bounce in recent trade, but overall this is a market that continues to be exceptionally well capped into rallies, favoring the downside and favoring the possibility of a lower top now at 108.26, which would ideally be confirmed on a break below the 2016 low at 106.24, exposing that next drop down towards 104. At this point, only back above 108.26 would compromise the bearish outlook. Aussie dollar. So Aussie continues to be very well capped into rallies after most recently stalling out by a 2017 high at 77.50, shy of that critical resistance, that multi-month resistance up towards 78. At this point, look for the market to roll back over. A breakdown below 74.75, which is recent support, would strengthen the bearish outlook and accelerate declines potentially back down towards the 70 area. Only back above the recent 2017 high at 77.50 would compromise the bearish outlook. Dollar CAD. Dollar CAD continues to be a market that's very well supported on dips, favoring the upside with a very constructive chart, and ultimately now the market is looking to put in a higher low at 132.24, that low that we had seen back on the 13th of April, ahead of the next major upside extension beyond the multi-day peak at 135.99 and towards 140 further up. Any setbacks should be very well supported ahead of this 132.24 recent support, with only a break back below that level to delay the constructive outlook. Kiwi dollar. So Kiwi has seen a bounce in recent trade, but overall this is a market that continues to show signs of topping out since 2016, stalling out ahead of 75, and then in 2017 ahead of 74. And there is risk for another lower top ahead of the next major downside extension below medium-term support, which comes in at 68.62, exposing the next major drop towards 65 further down. Only back above 72 would really delay the immediate bearish outlook for Kiwi dollar. SPX 500. The S&P 500 is slowly pulling back after a record high that was seen in early March just over 2,400, but at this point the pullback is classified as a minor consolidation ahead of what could be a bullish resumption back to fresh record highs beyond 2,400 and up towards 2,500. At the same time, the pullback could still open the door for a more significant decline and bearish structural shift, but we would need to see a breakdown below 2320 around that low from the 27th of March to strengthen that prospect and accelerate declines towards an initial measured move into the 2270 area. Gold. So gold has been consolidating off recent yearly highs, but this market continues to look quite constructive, with any setbacks seen very well supported in favor of additional upside towards the next measured move in this market at 1335. This 1335 measured move objective comes off a break of a previous 2017 high at 1265, which confirmed a fresh higher low at 1195 and opened that equal measured move to 1335. Any setbacks from here should therefore ideally be supported well ahead of 1195, ideally in the 1230 area, in favor of that next push towards that 1335 objective, which is just shy of the 2016 peak at 1375. Ultimately, though, only back below 1195 would compromise the bullish outlook for gold.